We're going to get that
going. There we go. Okay.
All right. Well, welcome again to Understanding the Paycheck Protection Plan Forgiveness. We're really going to be going through understanding this program. We have two esteemed guests with us today to walk us through this, and we think that this will be very valuable and you'll get a lot of useful information. My name is Colleen Doyle, and I am the Director of Member Engagement here at the Aurora Regional Chamber of Commerce. I'm going to be serving as your moderator for this call. If you do have any technical issues, please feel free to chat my colleague, Alexis. She is kind of waiting off on the side, so feel free to chat her if you have any technical issues. And with that, we're going to kind of kick things off. On the line, as I mentioned, we have two different speakers, along with a whole host of attendees, both chamber members and non-members. And for those that are not currently members, I want to give you a little background on the chamber. So the Aurora Regional Chamber is an association of businesses throughout the greater Aurora and Fox Valley region. We represent nearly 600 businesses in the region, spanning all sizes, from solo to hundreds of employees. And we also span multiple industries and sectors: retail, restaurant, B2B providers, manufacturing, logistics, you name it. So our mission is to be the catalyst for business success, and we're happy to be able to help businesses do that, especially now in this very, very critical time. So this webinar is part of our Implications for Employer series, and today we're here to talk about the Paycheck Protection Plan. I'll be moderating the webinar and walking you through, but a couple of housekeeping items that I just wanted to run through. You'll notice that for today's call, we do not have any video set up. So we have done that to make sure that we have the best audio quality. So this really is in listen mode. We will be doing a Q&A, so please utilize the Q&A and ask those questions. And we'll take care of the questions at the end of the webinar. As they come in, if it's appropriate, I may jump in and ask those questions right away for our speakers. But please definitely use that Q&A, and then we'll queue those and take care of those after the main portion of the presentation. So with that, I wanted to introduce our two speakers. So we have Harriet Parker and Brian Murphy joining us today. So thank you very much for joining us. Harriet is the manager of the Small Business Development Center at Waubonsee Community College. She serves, she's been there and has over 30 years of experience managing successful startup businesses. And actually, you know what? Well, I didn't advance my slide. One brain's working, the other side of the brain isn't. So I'll back up a second. That Harriet has over 30 years of experience managing successful startup businesses, where she's played a key role in designing and marketing software products that are in use nationwide today. In addition to her role at Waubonsee, she's the co-owner of HubTrack, a web-based business serving land surveyors and engineers. She actively supports local business community throughout her involvement in numerous boards and committees. Oops, and I'm advancing the wrong things here. And then we also have Brian Murphy. Brian is a partner with Murphy and Associates. He has 36 plus years of experience in small business accounting and tax services, as well as individual tax services. And his offices are located in Aurora and Sandwich. He does a lot of community work. So he is the treasurer and board member of the Sandwich Chamber, a fellow chamber of ours, and has served on various nonprofits. So with that, I want to go ahead and turn this over to Harriet, and then Harriet will kind of pass the baton over to Brian.
Great, thanks, Colleen. I appreciate you having us here today, and this is definitely a hot topic for sure. A lot of changing information on an ongoing basis. I just wanted to take a quick minute to tell everyone a little bit about the Small Business Development Center and the role that what we do in general, and then also the role that we're playing in all of helping businesses with the disaster relief assistance. So the Small Business Development Center is a grant-funded program. We get our funding from the Small Business Administration, as well as the Department of Commerce in Illinois, and then matching grant funds from Waubonsee Community College. And this grant funding allows us to provide assistance to local small business owners at no cost to you. So we can help you with your business at any stage, whether it's whether you're just starting up or you're trying to figure out growth strategies, struggling with anything, or looking to buy or sell a business, and we can help at any one of those stages. And all of, basically you just need to call or email me. I'm not sure I can, if Colleen's got the contact information, but I'll provide it. And then right now we're working remotely, of course, but my office is normally located in the downtown Aurora campus of the college. And then as far as the disaster relief goes, we have been taking calls from many, many business owners, helping with sorting through the rules on each of these programs, the PPP program that Brian will be talking about today, as well as the SBA Economic Injury Disaster Loan program, more commonly known as EIDL, and the recently announced Illinois BIG, or Business Interruption Grant Program. So we do have contacts where we can get updated information, and we'll do our best to try to answer your questions. So if there's anything that we don't cover today on this webinar, you can definitely feel free to reach out, and we'll do our best to help you. But before I turn it over to Brian, I just want to make one general comment, and that is, as far as PPP forgiveness goes, or really any other financial management of your business, it's really, really important that you're working with or talking to your accountant. Accountants are getting regular information on this program, and your accountant's probably going to be able to help you in ways that I can't. So definitely want to encourage you to reach out and check in with your, accountant on this. So that being said, Brian, I will hand it off to you and take it away.
Okay, thank you.
And actually, Brian, before you start,
Sure.
I do want to just point out to everybody, Harriet, you mentioned a couple of times about contact information. So I will be providing contact information for both Harriet and Brian in the presentation, and you will get a copy of that. So after later today. So don't worry about trying to track down contact information for them. That will be provided to you.
Great, thanks.
All right, so we're going to, in this webinar, we're going to talk about the forgiveness aspect of the PPP loan rather than the application and getting funds. That program ends today. So from that standpoint, it doesn't make any sense to go after that. So with that being said, I'll continue on with the conversation. So congratulations, you've received the loan. Now what happens? All right. And what we're going to talk about is, how does it get forgiven? How do you go through the steps to go through forgiveness? And we're going to do an overview on this process. We're not going to talk about anything in very specific details when that comes up. So if someone has a specific question, they can either reach out to myself or Harriet, or what I would recommend is also talking to your accounting professional. So we're going to go through a couple slides, which is going to provide some visual aspects as well, and I'm going to touch on various points within each one of those slides. So the first slide that will come up, and these slides are provided to us by the SBA. So one of the very specific things I want to talk about, this is the overview of the program. And originally the loan was for a 2-year loan at 1% interest. If you got your PPP loan after June 5th, however, you have a 5-year loan option for PPP repayment. That is the new rules that came out. Secondly, is that the 2-year loan program is negotiable with your lender. Now, I don't foresee a lot of lenders giving people longer than 2 years if you're under the 2-year program. But that is something you'll have to discuss with your lender when you go to loan forgiveness. Also, the loan changed to 60% of payroll costs are eligible instead of the 75%. The other thing is then your covered period has been extended from 8 weeks to 24 weeks. So you can elect to go the 8-week period or the 24-week period to spend those dollars. So that is a decision you need to have with your accounting professional and look at internally. There are a couple of safe harbor rules, which this next slide shows, and that is as a result of CDC guidance, where take restaurants, for example, you weren't able to open. So you have new rules that are available, okay? And that is a safe harbor, and that also talks about employees and their qualified rehiring and qualifying new employees. So that was that previous slide there. So this new slide here talks about some key dates. Okay, the key dates are 10 months from the end of the cover period to request forgiveness. The cover period now has been extended to December 31st, 20. So even if your 8-week period or your 24-week period ends prior to December 31st of this year, you do not have to apply for loan forgiveness until after December 31st, 20. And the reason that is very important is for the hospitality, restaurant, and some other industries that did not or were not able to open during their covered period. So when they got the money and that 8 to 24-week period, they may not have been open. So they have an issue with what they call full-time equivalents or employees, which we will talk about a little later in the presentation. So that may be a reason why you want to wait until after December 31st of this year to start your loan forgiveness. Okay, on the next slide here, we're going to talk about some, another slide, please. All right, keep going to slide 9. There we go. So this is an overview. Kind of touched on this already. The lender has 60 days to submit forgiveness to the SBA. The SBA has 90 days, and this is to render a decision to the SBA. This goes back to a 2-year maturity or a 5-year maturity, depending on when you've got the funds dispersed into your bank account. You also, in both instances, have a 6-month deferral of the payment. So you don't have to start paying it for 6 months. All right, so that's the other application. So if we go to the next screen, please. Okay. So there's 2 types of, these are the general eligibility costs we're talking about here, which we've all kind of gone through already. This is just a refresher. So your payroll costs make up of gross wages, any other pages that you paid them, the matching payroll, or not matching payroll, the matching retirement contributions from the employer, as well as the health insurance. Okay, those are your eligible. The eligible non-payroll costs are interest, rent, utilities. Okay, and that is mortgage interest specifically. And under the utilities, there's some very specific items that you have to look at with your accountant to go over this. Okay. On the next screen, we'll talk about there's 2 types of applications. There's the EZ, which is new, and the long form 3508. These are the new applications that came out just here in June as a result of changes with the SBA. We in our industry expect this to be changed again as these applications or people start responding to this. So unfortunately with the PPP program, it is an ongoing fluid forgiveness application. So there will still be some continuing changes. The key items of this one is to be allowing to be used the EZ form. So self-employed individuals that had no employees can use the EZ form. Also, people that were not self-employed, as you can see that they didn't have any reduction in their compensation by more than 25% to their employees. They didn't reduce their number of employees or hours paid, which is the FTEs we talk about. And then there are 2 safe harbor rules which allow them to do that. The key safe harbor rule that I like to look at is that if for some reason you could not open due to government restrictions of COVID, then you may be eligible to safe harbor rules that eliminates the FTE restoration. So you may be eligible that it'll allow you to have more of the loan or possibly all of the loan forgiven when you start to go through the application. Okay, so there's the longer form and the EZ form. We've talked about the EZ here because the long form takes the EZ form and just asks for more detail if you do not fulfill these qualifications. Okay. On the next slide, we'll talk about the documents then you need. All right. And what I want to let people be aware of, you need to think of this as an IRS audit. You're going to have to take that mentality when you start to accumulate information to support your forgiveness application. I'm telling my clients I would rather have more information when I submit the application on their behalf or when they submit it than to have less and have the financial institution or the SBA come back and say, look, we're denying it because we didn't have this and this and this. So one of the key items is tax records or tax forms. So if your 8-week period is expired here in the month of June, you can't apply until after July 1st anyway, because your payroll tax returns are not completed until July, even if you had a payroll service provide that information. So some of the information you're not even going to have. So what I'm telling my clients is to just sit back, relax, let's let July get all our filings done, and then we could apply for the PPP forgiveness after we've gotten all the payroll tax returns and all the required support documents in place, okay? As you see from this documentation screen, there is going to be substantial amount of information you are going to have to submit with your application for forgiveness. And then expanding on that, expect this to take a long time. I do not foresee the SBA or the loan lenders going through all this information in 60 days. Think of the thousands upon thousands of companies and businesses that got their loans. They are going to be overwhelmed, and they are not going to have the staff in place to respond to this as quickly as they think they are. Okay. The FTE situation here, which are what they call full-time equivalents. See there, the key item there is support that those people, if you go to the next screen, please, that those people are still the same people you had working for you from prior to the covered period and during the cover period. So those are the key items for the FTEs. Now, when we talk about the non-payroll items, which is utilities, mortgages, rental agreements, I'm telling my clients, provide me with your mortgage statement every month, the bill you paid. Give me a copy of your lease. I also need a copy of the canceled checks. I need your copy of your utility bills that you paid during that period, okay? They also are asking, involving this, they want to know what your utility bills and what your obligations were before February 15th, and then what they are from the covered period to see that you are on similar schedule. So that if you had the same rent in prior to February 15th, you haven't had a huge substantial increase in rent after February 15th. And this covers people that own the building and rent their property to their own corporation. Okay. Lastly is the documentation you have to retain. They're asking us to retain, as well as the client, to retain 6 years worth of this information. So get yourself a box, store it all in a box that's related to this, and you're going to have to keep that for 6 years. As you can see with the application, you have to keep all the support documents, you have to keep the forgiveness application and work schedules, everything that has a reference to this PPP loan, you're going to have to keep for 6 years. The position the SBA is taking, anytime from forgiveness to 6 years, we can audit you to see if you still received the loan factually and there was no fraud involved. Okay. Now, also, if you go to the next screen, once this loan has been received, it is final. What that means is if you get the loan in July or in August, and you have your loan for $5,000 out of $100,000 total loan, and you end up with a loan of $5,000, and because of FTEs, something changes later in the year, you cannot go back and say, look I now should have all of it forgiven. Doesn't work that way. Whatever they forgive at the date and the loan agreement, that's what you're stuck with. So this here is why we're looking at, on very specific industries, waiting until December 31st to start the application activity because of the safe harbor rules. Okay. Again, there is certain industries where that's going to be very important. I've got some businesses that are in Florida, that are restaurants in Florida. Well, November and December, they're hoping that it's going to be back to tourist season later this year, and they're going to match their FTEs in November and December. So their loans will be forgiven more likely after the first of the year than they would be now, because they are not up to level for their FTEs. Okay. So that is real important to track. And this is why you need to have your accounting professional help you with this and either create an Excel file or track this internally for you, or you track it internally yourself. If we go to the next screen then, oh, I'm sorry, go back one. This is the EDI. I'm sorry, this is the EDIO. So on this screen, if you look at specifically here, it talks about the eligible cost, the maximum forgiveness. It talks about restoring here, and it talks about the safe harbor rules. The actual application process has applications plus various worksheets that you have to provide the support for. So when you start to go through the application, you're going to have to fill out worksheets that will then support the application. And you're also then going to have to fulfill, have items in place to support the worksheets. So this is going to be a pretty thick forgiveness application that you are going to submit to your lender. And now what I believe a lot of lenders are doing, they're going to be asking you to submit this through your portal. So that means you're going to have to scan and upload all these documents. So we don't know how a lot of chambers, or not chambers, how a lot of banks, I should say, will be accepting this information in the future and what streamline effect they will have. They're just now starting to get their portals out. I got some emails from various banks, and they've kind of said sit tight. So what I'd like to do is kind of wrap up what we have here. I know I've tried to be very basic. I want to do an overview because each business has very specific criteria, and each business needs to talk to their professional accountant to go through their forgiveness process. So what I'm recommending most businesses do is to take the 24-week period instead of using the 8-week period. And that because that guarantees you've spent probably most of the money on payroll costs. Remember, when you got the loan, you took 2.5 times or two and a half months worth of payroll costs from 19. Now, over a 24-week period, that gives you 6 months, okay, to spend that for payroll. So the likelihood that you'll have this forgiven goes up. The only caveat to that would be is if your FTEs are not going to be able to be brought back. So if you've brought back all your people now in that 8-week period and you think that you're not going to have that available to you going forward, you might want to apply for the forgiveness over the 8-week period. Again, your accounting professional working with you should do the math. That's what it's going to come down to, and run the numbers to determine what is the smallest amount of loan you're going to have at an 8-week covered period versus a 24-week covered period. So that is a key item there. Okay. Let's see. I think that covers most everything I wanted to go. Additional comments I have for you is that most banks will not prepare the forgiveness applications. And the reason is it's probably going to be a conflict of interest because they loaned you the money. They are not going to probably want to help you work through this process. I'm also telling my clients to expect a rejection or a request for additional information. And the reason being is because I believe the SBA, the banks still don't know exactly what they need. So you're gonna submit stuff, either it's gonna get lost or they're gonna say, we now need this, or you need to prove this. So everybody is still learning. The SBA is learning and the banks are learning on how to process this forgiveness amount. And I also think it's going to be a issue with manpower to process the payroll. Restaurants, bars, hospitality interest. Again, I'm going to reiterate, I would recommend you wait until after January 1st to go through the process because you may have an issue with your FTEs, but you have to run the numbers and you have to do the math to see which is in your best interest. Finally, in closing, I want to reiterate the fact that need to work with an accounting professional and one that's familiar with the PPP program, okay? Not everyone is, and that's their choice, but you need to work with someone that knows, first of all, the front end, which is what the steps were taken to get the PPP loan, and now what steps are needed to prove that you can have all of it or a good portion of it forgiven. So that is very important because, again, this will be a loan. Now it's only 1% interest and it's paid out over 24 months, assuming that you don't get the longer term, something you still have a financial obligation for. So obviously the more that is forgiven, the better you are. I will talk about one item here because it just came out yesterday, and that is the tax issue. Under current IRS rules, the money you spent for that with the PPP loan proceeds are not deductible expenses under current IRS rules, okay? However, there is currently a bill in the Senate which is in the process of reversing that. So that means if you got a PPP loan of $100,000, you spent $100,000, they're going to allow you to deduct those expenses for tax purposes, okay? It's already been proposed, it's pending approval. That was Congress's intent all along. The IRS came out and said, we don't care. This is how we're going to interpret this law unless Congress gives us a new law. Their reasoning is that if someone forgive the debt, you would have taxable income. Thereby, you would be able then to deduct those expenses, net effect zero. if you don't have to pay tax on the debt forgiveness, then you shouldn't be allowed to deduct expenses, net effect zero. So that's where the IRS's thought process was in this. But I believe that law will be changing here before the end of the year. So that's my, in conclusion, I would definitely like to say you need to work with a accounting professional that understands the loan application process, the forgiveness process, and the tax effect as these rules are changing on an ongoing basis.
So Brian, I know one question that it comes up a lot for me is people that got the EIDL advance and the PPP loan and how exactly that's going to get treated. Are you able to address that at all?
Well, the way it's supposed to work is that the advance is supposed to, in essence, the advance becomes the loan because the advance reduces your cost. Okay?
Yep.
Now, that's under current regulations. All right? I think that'll change. I think they'll say, look, the advance is going to be because a lot of the people that got the advance weren't operational. Okay, so I think that'll change, but we're still trying to put this all together. And there is on the application, there actually is a section for the advance, and it works in conjunction with the application process. So, so the EDI advance, it does have a negative effect on the loan. And in theory, it's in essence what ends up being the loan, so to speak.
Right. And what I've been telling people is take that EIDL advance, set it aside. And, hopefully this will all wash out so that you can keep it. But if you don't, then you just give it back and use all your PPP money.
Correct. So are there any questions out there that somebody would like to, that we could answer?
Yeah, we did receive this, Colleen. We did receive a few questions. So one was, is there a reason or a benefit for using the EZ versus the longer form or the longer term?
There's really no benefit in using either form. Either you're qualified to use the EZ or not. Okay. I will recommend my clients using the form that best suits their needs to ensure forgiveness. Okay. Now, unfortunately, with the PPP loan forgiveness and the whole application process, a lot of times you're going to incur fees to a third party, either an accountant, lawyer, whomever, advisor that is going to charge you to help you with this process. So the more information you provide them, possibly the less cost it's going to be to you, and it'll also then determine whether you use the easy form or the long form.
Well, thank you for that. And I failed to mention before asking that question that we are transitioning obviously into the Q&A. So feel free for those of you on the call to use that Q&A function to add your questions. We'll continue to take them, but take advantage, especially as much as Brian has mentioned, making sure you want to work with the CPA to run the numbers and do the math, that we have a CPA on the call. So let's, take advantage and, give us your questions. And then Harriet has such vast experience working with small businesses across an array of topics. So the two of them are definitely a wealth of information. So we've got a couple more questions coming in. Ethan wants to know what documents or proof for the plain self-employed person. Let's see, hold on. What documents or proof for a plain self-employed person, because we don't payroll ourselves? I'm not quite sure.
If I had to guess what that means, I would guess that it means, so if you're a Schedule C filer and you don't actually write yourself a paycheck, how will that be, how will what numbers will you submit for
And
forgiveness for
he
payroll?
has said that that is the correct question that he is asking. So if you want to try and answer that for us.
Okay, so if can you bring up that one of those old slides, possibly, Colleen, if you can. If not, I will talk in the meantime. So
Yep, I
basically,
can.
So go to the one that was the EZ information.
Okay.
So what happens is that as a self-employed person, they're going to want bank statements. They're going to want canceled checks. Okay. They're going to want those items because you do not have any payroll tax records. So so I've got my clients that are self-employed. Let's say the $20,000 went into their bank account. Okay. They basically wrote themselves a check for $20,000. Okay. So if you look at item number 1, all right. So that is the topic they're talking about for self-employed people. You are still going to have to provide bank because you're self-employed. If you now go down to slide like 14, somewhere right around there. Okay. Right there. Actually, that one right there. See, if you look at this, it says bank account statements, tax forms. Okay. Now you're not going to have payroll tax return forms, but you're going to have bank statements. You're going to have canceled checks. You're going to have those documentations that are going to support that you, in theory, paid yourself. So if you got $10,000 in PPP money, in theory, you could write yourself a check for $10,000, and then that will all be forgiven because as long as you're not over 15,000 and change on the 8-week period, which is $100,000 divided by 52 times 8, then you'll have your entire loan forgiven. I mean, sole proprietors, Schedule C in this program have the best deal, okay? Because everything they make is in essence paid to them. Now, I don't know if that'll change, caveat again, if they don't make enough profit. So for example, let's say you got a $25,000 or $30,000 PPP loan and your profit at the end of 2019 is $10,000. That, we don't know if that could be a problem. I mean, because they have forgiven it all in the 8-week period, but if they look at your Schedule C, you didn't make enough. So these are questions that are still coming out going forward.
And Brian, I know there's this term called owner compensation replacement for like self-employed, so it's no employees. And also there's a document that came out that SBA published on Friday, and there is a step-by-step way to calculate for each employee type or each employer type. So Colleen, I can provide you with that link, and that might be something that we could send out to all the participants. But
That would be great. I'll include that in the follow-up email that
okay.
everybody will receive.
Yeah, and basically what it looks like it's saying is that you're going to take your Schedule C from 2019 that you used to apply. And Brian, maybe this is just restating what you just said, but that you're basically going to, take the divide by 12 multiply times 2.5, which is the same thing you did when you applied, and that's the number.
Correct.
Does that sound right to you?
In theory, it is correct because
in theory.
well, yeah, we were saying that because in theory, then that's what you give yourself. You're giving yourself exactly what you applied for.
Yeah. And I think I also saw in the chat that there was a question about people who got PPP, used up all their PPP, and then so sole proprietors or independent contractors that got some PPP money, used that, and then flipped over to unemployment. You have any comment on that?
They're unrelated.
Okay, so
right,
the two are not.
So now here's the situation from unemployment standpoint. I would question. And I'm sure unemployment hasn't even thought about this.
Probably not.
Because technically you were working. So you shouldn't have received unemployment for the period you got your PPP.
Right. So
In
they
theory,
shouldn't overlap.
they shouldn't, in
But they
theory.
Right, but they could be contiguous, right? So you could use PPP for, let's say, 8 weeks. So if you got your PPP money at the very beginning, you use that for 8 weeks, and then now you're still not employed. So now you file for unemployment.
Right.
But like you said, in theory, the question is how that is all going to be.
Correct. Because
Um,
correct. The problem with that it will be is that when people apply for unemployment, they're going to say, I've been employed since March. And there's no question on the unemployment program that asks if you got PPP funds.
right.
So, I mean, that's the problem we're having with these programs now. Is it gives unfortunately, there may be an opportunity to double dip.
All
Yep.
right, we did receive one more call. Anita is asking if there is a way, not necessarily for PPP, but is there a way to check the status of our EIDL application?
There is no way to check the status that I know of. You just have to wait for them to reach out to you and tell you what to do next.
And you could tell her they will reach out to her via email.
Yes, correct.
Okay.
So if you have a, well, especially if you have a like Gmail, Yahoo, that type of mail, make sure you keep an eye on your junk mail.
Correct. And also, I had a client have this happen. They got their PPP loan, and then they got the email for the EDI loan. Didn't realize they were two different. Signed all the paperwork for the EDI, sent it back, called me afterwards, said, hey, I got $75,000 in my bank account. Where did this come from? Well, we figured out that they took the EDI loan. And so be careful on that because they are two different loan programs. And remember, the PPP comes from the financial institution and the EDI comes from the SBA.
Right, and also just I'll add a couple things on the EIDL, the EIDL loan, and that is that it is there is no prepayment penalty on that loan. I do have information on how to make payments if you can't find it in your loan documents. It seems like some loan documents include it and some don't. But if you took the EIDL loan and you want to, know how to pay it back or make payments on it, I have that information. Also, it's a 30-year term loan at 3.75%. So, but there are, and I know we're talking PPP, but I'll just throw a couple things in here. There are restrictions on how the EIDL loan can be used, and only for general operating expenses, not for any capital purchases, loan refinancing, loan payoffs, or any of those types of things. So that's kind of the real high level. And I see somebody said they were on the impression that EIDL was a grant. The advance portion of EIDL is a grant. And then unless you got PPP also, because those are going to have to get potentially rolled together, then there is a loan component of EIDL that is different from the advance, which is has to be repaid.
Right. And you don't have to take the loan if you got the advance. You can reject that loan.
So the advance would have been $1,000 per employee, so an even $1,000 per employee. So if you're single, if you have no employees, the advance would have been $1,000.
All right, we do have another question. Any special tips for seasonal applicants? Any precautions, anything like that?
Yes, there are special requirements and safe harbor rules for seasonal people. So they look at the periods are different for the FTEs. Okay, based on seasonal people. So you can look at one of two periods. You can look at the current portion of the current year, or you can look at the prior year. So you need, well, again, you need to look at the specifics depending on what your seasonal business is, okay? And pick, I always tell people, as far as the FTEs goes, you're gonna pick, obviously, the period, because you have two options that provides you with the least amount of loan going forward, okay? Again, that may be a reason why you also wanna look at the 24-week period from a seasonal standpoint, especially if you're in your seasonal business has to deal with the outdoors, all right? So now you're in your peak area. So those 24 weeks are gonna cover from maybe April through October, which is your peak area. So your FTEs will be higher and you'll be good then.
All right. We do have another question came in from Melissa. Can you use the idle to pay off the line of credit that was incurred due to closure?
The idle loan, you cannot use the idle loan to pay off any other debt. You can use it, my understanding is that you can use it to make like regular payments on anything but another federal loan.
Yes, the idle loan cannot be used to pay off any debt at all. Definitely know that. However, remember, the idle loan could be used to pay operating expenditures going forward. So, real quick example, you got a $100,000 idle loan and you had a $50,000 debt out there currently. Well, if you're running your business and you make $10,000 in the month, you could, in theory, save that $10,000 in a savings account, use the loan to pay your operating expenses. Then in theory, that $10,000 that was out of profits and earnings could be used to pay down the loan, pay down your other loan, not your idle loan. You're not using the funds for the idle loan to pay the debt, all right? You're using earnings and profits to pay down the debt, which you would be doing normally. So there, again, the key item here is working with your accounting professional that might be able to help you through the options available to do what you ultimately want to do.
Yeah, I would second that. I mean, record keeping for all of this is really important because there's a lot of money, you know, coming in from places that you can't use in other places, and then other money in your business that you might use for that. So keeping track of those different funds and how they're used and having documentation for that is going to be very important.
All right, and then we still have yet another. We're good on time still, so let's see. For the idle, is there an age restriction? And the specifics, he's thinking that for like a teen that has you know, a side hustle gig.
I'm not aware of an age restriction, but I would say from a legal standpoint, they have to be of age to sign a loan agreement. I would think that SBA is not going to give a loan to a 15-year-old because they're not then legally obligated.
Well, and also if you know, this person has not applied yet, I think well, there's a difference between the advance and the loan, but the question is, I'm not even sure they're going to qualify for a loan depending on how much, you know, they put in as their income. So it's possible, but I've seen a lot of really super small businesses, they get the advance, but that's all.
All right, well, I think that that's it, unless there are any last, you know, couple questions. I don't have any anything else coming in. So I think with that, we can wrap this up. Brian, Harriet, thank you so much for taking the time today and for your knowledge, for going through the questions. As we assumed, the Q&A portion was going to be really valuable to be able to answer those very specific questions. So, so thank you to both of you. As a reminder to all of our attendees, today's webinar was recorded, so we will email the recording out to you, the presentation, contact information, the links that that Harriet referenced. We will, well, I'll put all of that in the email. You are seeing on the screen for the chamber, Jessica Lindergallo. She is not on the call today, but I did want her contact information available to you. Contact for myself, Harriet, and Brian. So you will receive, you'll have it here, but you will also receive this in the presentation. So, so no need to jot it down right now. But thank you again to Brian and Harriet. And then just to kind of wrap things up here, just a little bookend plug here for the chamber. We do have some upcoming events on July 14th, July 15th, and July 30th. So after the 4th of July holiday, we have a professional sales development session. It is a $10 registration. This is every 2 months, and it's really meant for key selling professionals. We have a multi-chamber power hour, where we are partnering with four chambers. So our chamber, the Aurora Regional, along with the Bolingbrook Chamber, the Naperville Area Chamber, and Chamber 630, which is in Downers Grove. And that is a $10 registration. Each chamber is limited to 25 attendees, so there can be up to 100 attendees on the call and in breakout rooms. So it is actually a really fun event. And then closing out the month of July, we will have the Fox Valley Networking Professionals. This is a longstanding chamber favorite. It is complimentary for all businesses. And I did put in there that could potentially change to in-person. As we know with COVID, things change rapidly. And where we are today and where we are a month from now can be very different. So we will keep everyone up to date on whether that changes to an actual face-to-face, socially distanced event, or if it's going to remain virtual. So with that, that wraps us up. We're just coming in under the hour. So I want to thank all of you for staying with us and learning all about the PPP and really understanding that forgiveness. Again, Brian and Harriet, for your knowledge and taking all of those questions. We really appreciate the insight that you shared. And we look forward to having all of you on a future webinar with us.
Thank you.